Greetings, members, one and all of the Salvation Nation. The unexpected way gold and silver could explode. Let's explore. You know, there's a lot of pontificating here in the YouTube community about precious metals. For those of us in this space, it's what we do. We talk about the movement of the price and what could cause it to go up or down. We are disappointed when it doesn't go up or disappointed when it doesn't go down further because we want to buy. But nonetheless, it is an interesting exercise to see what moves the price. I've always found that quite fascinating. And the bottom line is, and that's a reoccurring theme in my channel, is when we see the price action of gold and silver, a lot of it has to do with emotion. And that emotion is tied to, boom, shalaka, this thing right here, the dollar. Yes, indeed, the dollar, the currency we love to hate. And it's not so much that we hate it. In reality, when we look behind the scenes, we hate the establishment that manipulates it. And it's not just the private institution of the Federal Reserve, but the politicians that are behind it. I'm trying to make a case here that essentially the Federal Reserve, though a private institution from unelected bureaucrats, essentially, because that's what it consists of, there are appointed. And they have to pass Senate confirmation for the Board of Governors, right? And the president appoints the Federal Reserve chair. He goes through hearings. In fact, Jerome Powell just won another term. And what do? They are all about what appears to be modern monetary theory. And of course, they're getting in trouble now, and they're having to employ some actions to try to keep this inflation under control. Really, in reality, it's continuing to rise. And yes, we will probably see lower numbers, but make no mistake, because you can take any statistic and twist it in a certain way. But if, let's say, that it falls the next time they do it down to 6%, that's 6% above an already inflated number that happened over a year ago, because this inflation is now about a year old now. And so we did see it move down a couple of points, but it's still running very, very hot. A couple of percentage points, that is, and in terms of decimal, the tenths of a percentage point. But there you go. So the dollar is the thing that is frustrating us right now in terms of the price for these metals. And right now they're low. But there's a rare thing that could happen that occurred before. It's called the Plaza Accord. I'm going to talk a little bit about this and what happened then, at least from this article from Bloomberg talks about this and how it can relate to the dollar. And we came very close to something like this happening on a different level back around in 2017, 2018 that I covered on this channel. And I've always wondered, because I do think there is, in a sense, a conspiracy by some, mainly what was referred to the BRICS nations, to potentially kind of gang up, as it were, on the dollar. So this is the 1985 Plaza Accord. And so the dollar's skyrocketing rise has some contemplating this rare, if not unthinkable, action. But major nations are agreeing to essentially manipulate the U.S. currency until it falls. The dollar is falling on its own. It doesn't need much help from others, but the problem is that it's just the cleanest of the dirty shirts in the laundry pile of other currencies out there, as measured by the IMF, the breadbasket of other currencies. The dollar index, the DXY, is very strong right now. So it's happened before, as I mentioned, with this Plaza Accord, and it took place against the backdrop of soaring inflation. That inflation started in late 70s and moved its way through the early 80s. An aggressive Federal Reserve rate hike campaign and the surging dollar. In other words, a scene that looks a lot like today. But of course, there's other things. They say that history may not necessarily repeat, but it does rhyme. So it's a parallel that won't be lost on the group of 7 finance ministers and central bank governors as they meet this week. Demand for the greenback has been relentless this year, the result of interest rates rising quicker in the U.S. than other developed economies, and the war in Ukraine prodding a stampede to the ultimate haven. And, when we think of the ultimate haven, we think of gold and silver, and especially gold these days. But not them. The dollar, the 6.3% surge since the start of the year, has clobbered the yen to a 2-decade low and put the euro almost back to a 1-to-1 parity with the U.S. currency for the first time since 2002. In 2002 was really the big rollout of the euro. Other nations had joined the euro earlier on in 1999, but nonetheless in 98, I think. But investors are lasering on the yen tumbling to 150 per dollar and the euro falling below 90 cents as a potential line in the sand. For Stephen Miller, a 4-decade market veteran and former head of fixed income at BlackRock Incorporated. Now, BlackRock is a company that has their hands in everything from not only A-mark precious metals, but also in some regards to the Great Reset and the World Economic Forum. In Sydney, the situation now is reminiscent of his time as a young buck in Australia's Treasury Department, where he had a front row seat watching the Plaza Accord unfold. Through that agreement with France, Japan, the UK, US, and West Germany agreed to weaken the dollar. Notice that the U.S. was involved in this. Interesting. This is a stance taken out of a belief that the dollar's huge move higher was damaging the global economy. Wow. One of the options down the track could be some sort of coordinated intervention, said Miller, now an investment consultant with GSFM, a unit of Canada's CI Financial Corporation, which oversees about $289 billion in assets. Markets recognize that central banks are in a bind when they've only got the interest rate lever to push. So there's already market chatter contemplating these sorts of scenarios, including a Plaza Accord style move. And when you think about the dollar strength compared to other currencies, you look any time now for the past couple of days, and maybe even a week or so, many of these precious metals are up in other currencies. They're mainly down in the dollar because of the dollar strength. Of course, no one is predicting imminent intervention at this stage. U.S. support could be crucial to any effective agreement, and that's not likely in the near term, given dollar strength is making imports cheaper and attractive quality during an era of high inflation. Still, finance experts do see looming pain points for countries outside the U.S. that could amplify the drumbeat for coordinated intervention. And then essentially this kind of collusion to bring the dollar down. If the euro sinks below 0.9, the euro stinks, all currencies stink at this point because there's nothing backing them other than fiat, and they are all engaging in this modern monetary theory. And it's down from 1.05% currently against the dollar. That could start raising alarms, according to Alan Ruskin, which is the chief international strategist at Deutsche Bank. Gamma Asset Management Rajiv De Mello sees a yen collapse to 150, a level last seen in the 90s, as a potential trigger. A disorderly rise in the dollar might be a game changer, said Goldman Sachs Group strategist Zach Pendle. Peer pressure. There are certainly parallels to the U.S. currency strength back in 1985, and now the Federal Reserve's trade weighted dollar index has risen in an annualized clip of 14% so far this year, quicker than the 12% pace seen in the 5 years leading up to the Accord. U.S. inflation is at its hottest level since the 80s, when Fed Chair Paul Volcker raised rates as high as 20%. And current head Jerome Powell has vowed to do that, what it takes to curb rapid price growth. So it's something to consider, especially if we see a crash in other currencies, says De Mello, global macro portfolio manager in Gamma at Geneva. In fact, we're seeing unrest in places like Sri Lanka right now. And so there's already problems brewing, and that's not being talked about in the news very much. But there's problems there and other nations around the world too. And obviously, Venezuela still has issues and problems. And we see more third world nations and so-called developing nations start to see this, and they pile up. Well, it's going to put some threat on other areas too, and other nations that are developed nations. So this bona fide Plaza Accord Part 2 hangs on American involvement. The 1985 deal, whose namesake is a notable Plaza Hotel in New York where the conference was held, was inked only after the second Reagan administration viewed foreign exchange intervention in a more favorable light, underscoring the difficulty of coordinating any major agreement without American support. China's rise in global markets is another factor. Beijing will likely need to agree to any coordinated central bank action, but the yuan, the renminbi, is not trading at levels that would require such intervention right now, according to Gamma. And so there's things that need to happen here, and the stronger dollar tightens monetary conditions, and this will be helping. The Fed's policy, said Graham, the hurdle for coordinated action is still very high. So it's still relatively rare that this could occur, but if it does, well, gold and silver could potentially explode or skyrocket. I looked at some charts and historical data for gold and silver around this time, and we did see a pretty big jump. I won't say it was a massive price increase, but it was a substantial increase for a time of gold and silver's prices. And the reason why I think they could explode now is because leading up through 1985 to 1986, the savings and loan crisis happened in 1987, and that was something that was short-lived and really didn't have that much effect, at least on the precious metals, leading into that crisis. But that was a standalone crisis. There's a lot more happening now. There's a lot of moving parts. There's a lot more economic instability, geopolitical instability at this point, that if they were to do it, that could cause stagflation, further inflation, a deepening recession. It could almost lead to a depression. And in a way, it could essentially, with a weakened dollar and unrest, people will lose their faith in the dollar and they'll run to the faith of the hard assets, gold and silver. I believe that is a distinct possibility if this thing does happen. Sounds like there's a lot of hurdles to go through, according to this article, and I really believe that's the case. But it's interesting to look back at history to see where it is. But think about it, folks. What is keeping gold and silver down, especially silver? It's this. It's the dollar. You've heard me talk about that in a prior video. The dollar is a force to be reckoned with. We all know that it is unsound money, and that is the thing. We all need it. We use it. We have to in order to get by. But channels like mine and others, well, we encourage you to hold gold and silver. And I think especially gold. I'm not saying you shouldn't have silver. I believe in having silver, but I believe in diversification into gold because gold tends to be a better protector, a better wealth preservation device through time and through the medium term, and even in short-term situations, it does fare better than silver. But silver, indeed, if you play your cards right, make your buys based off of what I refer to as smart dollar cost averaging, which is something that I encourage to utilize for both gold and silver. But silver, you got to be a little bit more on your game and be able to make those buys in a certain way. I have a long waiting an order that's taking a very long time to get here. It's been delayed yet again. But it's about silver, and you'll see it when it gets here. But nonetheless, here's where we are at with silver and gold, the dollar, and what it's and the force to be reckoned with. It's only being propped up because of the performance of these other currencies, which is subpar at most. So there you have it. Let me know what your thoughts are in the comment section below. Hope you found this video insightful. I would like to extend a multitude of gratitude to you all for taking the time to watch this video and encourage you to watch a little bit more because I want to show you this Morgan dollar here. Yes, indeed, this is not a proof, although it's very close. I think that's got to have a certain amount of reflectivity in the fields there, but it almost looks, it's nice heavy frost there. But this is a 1885 New Orleans Mint Morgan dollar here. You can see the O there. That's this Morgan dollar's O face, folks. It's Morgan dollar's O face. But yeah, I just thought I'd share this. I like me shiny Morgans. I'm a pretty big fan of the original, almost proof-like Morgans, and I've got some others I'd like to show in another video. But I thought I'd share this with you. I pulled this out. Thought I'd show this in there. It's 1885 O. Pretty much almost a proof-like, but not quite there. You can't quite see the reflectivity in the fields, but boy, it's got some nice contrast with that frosting. Yes, indeed. Frosted devices, they're magically delicious. There's a little bit of reflectivity. This side may be somewhat of a dimple. But this side I don't think is going to, well, it could get it. I don't know. But anyway, so there you have it. Let me know what your thoughts are. A multitude of gratitude to you all for taking the time to watch. I want to encourage you to please rate, share, and subscribe.